In this video, I'm going to show you why exactly I used Bookmap this morning. We had this big nasty candle down right as the job numbers came out. And in case you were under a rock and you did not know, the July jobs report unemployment rate jumps to 4.3%. Job gains total 114,000, and they were expecting 170 or 180,000 jobs. So that was a big miss out here. Now, is there a way that we could have known ahead of time the market was likely to come a little bit lower? And I'm going to show you what happens when big traders get stuck in a losing trade. Now, in order to know where the market was likely to go, we're going to come over here and take a look at Bookmap. Now, if you do find yourself interested in Bookmap and you want to support the channel, use the link in the description box down below to save a little bit of money on your Bookmap subscription. But look what happens about right before the news comes out. We're looking at it about 25 seconds or so before the news comes out. But even before that, if we zoom out, look, here's where the algos were basically, putting bids and offers in the market. Right before the news, they yank all those orders out of the market. But look what we can do. We can zoom this out, right? And this is what I talk about a lot of times in the stream. We want to see resting liquidity that has been there for a while. So we look to the left, this resting liquidity right up here has been up there for a while, right around 54.40. But look what we have right down here below us at 53.90-ish. We have over 2,000 and something contracts sitting there saying, you know what? If the market gets down to this level, I want to be a buyer in this market. Now, how can we use this information? Well, it's twofold. One, if you're already in a short position, this is likely going to be a good target location. However, you got to be mindful that the market could also make it up towards here. And you guys know my MO. I do not like jumping in the market right before the news. So let's go ahead. And I'm not going to zoom up the bubbles a lot for this example. And I'm actually going to speed this up. I want you guys to see exactly what happens. I sped up the playhead just a little bit and look what we did. All right. So now we start coming into this bubble right here, and notice initially what we're going to find is it actually starts to provide support. You see, we test it, we bounce, we test it, we bounce, we test it, we bounce. Why is that? That's because there are so many contracts. There are still 1,900 contracts sitting out there. So even though the sellers have sold into it, there are still more buyers there able to support the market. So if you're looking for a bounce off this area, there's a lot of contracts holding you up at that price point. Then we're going to simply go ahead and hit play a little bit more, and let's watch how this plays out. That might be a little bit too fast for us. Let me zoom this back out here for a moment. And I want you guys to see here in just a moment, we're going to see all that liquidity now has been taken out. However, when we zoom this up, look what happened. All the buyers there, they end up getting filled, and then the market starts to go lower. Notice what happens almost instantaneously. As soon as it starts to drop, the buyers are saying, uh-oh, we have buyer's remorse. Look what they do. They're like, oh, please let me out for just break even. Let me get out for just a tick or two. Please, please, please. I know I made a mistake. Please, dear markets, I will never do it again. Now, this is something that you cannot see by looking at a candlestick chart. All these big buyers are now sitting right up here. How do we know? We have 2,800 contracts right over here. We had over 2,000 contracts at this level where they were looking to buy. Now they're like, uh-oh, we made a boo-boo. Please, let's see if we can get out. Now, one thing that, as I slow this down a little bit, I want you guys to see how this plays out just a bit, just so you guys can understand the mechanics of the markets. All right, when we have liquidity above us or below us, if we have buying opportunities in the market, guess what? This liquidity is going to act as a magnet. The market wants to go ahead and trade up towards that high liquidity area on the chart. And what we're going to see here in just a moment, that is exactly what is going to transpire. However, it does take a while before we actually make it up towards that level. But keep in mind, as long as the big orders are sitting up there, the market's likely going to be attracted to it. You can see we have over 3,000 contracts sitting up at that liquidity level. And we're going to see the market's going to run up there and essentially try to tag that liquidity area. Now I'm going to zoom this out a little bit so I can speed it up. You can see the liquidity is still not going anywhere. The bubbles right here is exactly where price is at. And look at what we're doing. We're coming where? Right up towards that liquidity level. And the buyer's like, oh, please, oh, please, oh, please, 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 just let me out of this trade. I know I made a mistake. I know there's a chance we're in a recession or going into it. I know the market's going to continue to dive lower. Please, oh, please, I will never do it again. But we're going to see here in just a few moments, and it does take a while. All right, now we start getting up into that liquidity. We go ahead, we eat all that liquidity. And now what's likely to happen? Once we eat in all that selling activity right there, we're likely going to go ahead and continue to push higher, then looking for the next liquidity level. Now, I may be dropping another video later on where I'm going to show you another example from today, meaning on NFP day, non-farm payroll day, where we had another very large order in the market. And this could have gave you a heads up for a huge breakout trade in the market.